respected brothers and sisters in Islam. In the previous videos, we discussed different types of shirka: joint ownership, business partnership by contract, partnership of capital, and partnership of work and skill. In this video, we will discuss two more important concepts, Shirkat al-Wujuh and Mudarabah. Then we will summarize how to choose the correct structure for modern business. What is Shirkat al-Wujuh? Shirkat al-Wujuh is a partnership based on reputation, creditworthiness, and market trust. In this type, partners may not have capital in hand, but they have credibility in the market. Because of their reputation, suppliers trust them and give them goods on credit. They then sell the goods and share the profit according to their agreement. This form requires special care because it involves credit, liability, and responsibility. Modern example of Shirkat al-Wujuh. Suppose two traders are well known in the market. A supplier gives them goods on credit because he trusts their reputation. They sell the goods, pay the supplier, and share the profit. This may resemble Shirkat al-Wujuh, but it must be very clear. Who is responsible to the supplier? Who has authority to buy on credit? How will profit be divided? Who will bear liability if payment is delayed? What happens if the goods are not sold? Without clarity, this type of partnership can become very risky. What is Mudarabah? Mudarabah is a special business arrangement. In Mudarabah, one party provides capital and the other party manages the business. The investor is called Rab al-Mal. The business manager is called Mudarib. The profit is shared according to a pre-agreed percentage. For example, 60% for the investor, 40% for the Mudarib. But fixed monthly profit is not allowed as Mudarabah profit. Loss in Mudarabah. In Mudarabah, if the business suffers a genuine loss and the Mudarib has not committed fraud, negligence, or violation of agreement, then financial loss affects the capital. The Mudarib loses his effort and time. But if the Mudarib misuses money, hides accounts, acts against the agreement, or is negligent, then he may become responsible. This rule protects both sides, the investor from dishonesty and the manager from unfair liability. Choosing the correct structure. Now the important question is, which structure should we choose in modern business? If people jointly own property, the issue may be Shirka al-Milk. If people agree to run business together, it may be Shirka al-Aqd. If they contribute capital, it may be Shirkat al-Amwal. If they contribute skill and service, it may be Shirkat al-A'mal. If they use market reputation and buy goods on credit, it may resemble Shirkat al-Wujuh. If one gives capital and another manages the business, it may be Mudarabah. The correct structure depends on the reality of the arrangement. Why correct structure matters? Choosing the wrong structure creates confusion. For example, if a person is actually an employee but is called a partner, there will be dispute. If a person gives a loan but calls it investment, there may be Sharia problems. If a person provides capital and another manages the business but fixed profit is demanded, then Mudarabah may become invalid. So, first understand the reality, then choose the contract. Final checklist. Before entering any partnership, ask, what is each party contributing? Capital, work, property, reputation, or management? Is the business halal? Is profit a percentage of actual profit? Is loss principle clear? Who has authority? Who keeps accounts? What happens if the business ends? If these questions are answered clearly, the partnership will be safer and more Sharia-compliant. Conclusion. The main message of this chapter is Islamic law provides different types of partnership for different business needs. These types are not only theoretical, they are practical tools for modern business, but they must be used correctly. A successful Islamic partnership requires halal business, clear structure, proper profit sharing, correct loss principle, transparent accounting, and honesty. May Almighty guide us to conduct business with clarity, justice, trust, and halal earnings.